Krishna Institute of Medical Sciences is in focus as the company has decided to acquire 51% stake in Nagpur's Kingsway Hospital for 80 crores. Now, Kingsway is a 300-bed multi-speciality hospital and they will use the funds to repay debt. To discuss that, we are joined by Bhaskara, the Managing Director at Krishna Institute of Medical Sciences. Mr. Rao, can you tell us a little bit about this acquisition? What are the occupancies of this hospital currently? Is it profit-making? And do you have plans to acquire the additional 49% stake? Or will you just stick with this 51% stake for now?
So, good morning. And this is the opportunity we got in the central India, where we are informing to the investors that in the Maharashtra cluster we want to build one of the first hospital in Nagpur. It's a nearly 35 lakhs population, and this hospital has been built in 2019 by a SMS industrial person along with few doctors, has partnered with them and they joined, and it has been opened in the peak period of the COVID, and they could able to turn around, and after that there is an opportunity for us to go and strengthen their existing facility by adding more clinical branches, more therapeutic branches. That's the reason that they have come to us, and we also looked into the opportunity. There is a lot of potential in this area, and the doctors are all more than 20-25 years experience in their own field. So there is a lot of potential to grow in the same branches, and as well as we can also add with our existing of new therapies. That's why we found this is the greatest opportunity for us. And also the culture and the habits and everything will be similar, where we have been acquired all these years within a doctor partnership. So that is one of the most important things, so that they can also grow along with us. That is one. Second thing is, whatever is the 51% to stake we need to put in, as we are always looking at the existing doctors has been spent about nearly 7-8 years by making this unit a successful one. So we want to continue them, and later on, if there is a need, we can also acquire, or we can also merge along with the KIMS main consolidated company. And also we can able to, these people will also part of the growth of Maharashtra cluster. That's why, because of their 30 years experience in their own field, that's why we selected this. And later on,
Mr. Rao, sorry, if you can give us more details of how are you planning to fund this acquisition?
The thing what we are seeing right now is about nearly 334 beds as of now, and it can go up to 500 beds with a minimal capex. But ultimately today it is costing us around 90 lakhs per bed, and when we ramp up to the 500 beds, it is coming down to 70 lakhs per bed. There is a 53% occupancy as of now and this year, and there is a lot of potential. This 53% is out of 250 beds are the functional beds. The other beds are also ready, but we have not been sourced the manpower. Whenever there is a need, we can able to source them, and we are adding more and more clinicians and more therapists.
Mr. Rao, 53% occupants, 53, right? 5-3.
Yeah, 5-3 in 250 beds, operating beds.
Yeah.
As of now.
Okay. Now, that is a very low number, right? You would agree, Mr. Rao? I mean, any particular reason for that?
This is only 3-year-old hospital, and then the post-COVID and all, that's all. Usually any new venture that will take, this is a great thing they can able to achieve in 3 years' time. Okay. Because one and a half year has been gone with this pre-COVID, post-COVID recovery and all those
Got
things.
It. Mr. Rao, to go up to 500 beds, how much capex is required? You said minimal, but how much?
Maybe another 40 crores max for all these things, to put in the new equipment, new technology, and remodifications of few more beds to put in.
So you'll have to put in half of that?
Yes, nearly it will become another 40-50 crores.
Okay.
Okay. Any more acquisitions? Because, you know, you have been acquiring, I mean, this is your second acquisition that you've done in recent times. Any more acquisitions that you're looking at? If yes, what would be the growth via the inorganic route?
So actually what our thing is that we want to build the clusters. As you know that in Andhra and Telangana in the last 2 decades we are looking the similar fashion in Maharashtra and Karnataka and Tamil Nadu. So in these areas, we have been a open eye on the inorganic growth and as well as the organic, if there is a good potential that is available. So we will be keep adding more and more beds. We are looking out in the entire central India, that is especially in Maharashtra. When we are looking for few opportunities, but we don't know when it is going to get materialized.
So you're looking to add more beds via the acquisition route. You think anything could crystallize in this calendar year itself?
Not as of now. We are only talking about, that there is a lot of legal issues. We need to do the due diligence and all. We are not sure when it is going to come. Definitely, we are on the route in organic growth in central India.
Mr. Rao, out of the, so now how many beds are you operating, and are these all owned by you, or some of them are you own the equipment, you own, and it's kind of the facility itself is owned by someone, so you're managing it basically.
Most of the units are our own,
Okay.
except one unit in Kondapur. There also we are planning to shift, as we mentioned before.
Okay.
So the reason is we always believe to have our own so that it will be in a long run, it will give good ROC and also the good return of investments for everyone. So that is our strategy from day one.
Okay. For FY23 and FY24, could you provide us with some sense overall post this acquisition? What will revenues look like, and broadly on the bottom line, what is the kind of growth we should expect on top of FY22, the number that we already have?
And see, basically, you see, we have been acquired the last couple of quarters back, Sunshine, and then this is the Nagpur. What will happen in the beginning of any acquisition? We need to add more consultants. It is going to cost for the organization. By the time the new consultants who come onto the board to perform and show. So the bottom line, maybe little bit of a growth will be there. Definitely there is a growth in the existing, apart from these acquisitions, there is a single digit growth will be there in our KIMS consolidated one, about 3,000 beds. And these beds may not able to contribute in the next 1 or 2 quarters of this financial year. The next year will definitely contribute a reasonable good growth of double digits.
Okay, so you're saying initially your costs will go up. Actually, that is, I think, reflecting already in your earnings, and perhaps that's why the stock is down as well. The margins have come under pressure. Your margins were about 30% earlier. They are now at 28%. Your EBITDA has fallen about 5%. So if your costs escalate because of these new acquisitions, how much pressure do you think it could put on the margins?
So basically, any acquisition that comes, it will be definitely low. And then once it has been there in 2 to 3 years' time, it will reach to our maturity level of what we have been performing in the KIMS in the last 2-3 years. We will definitely achieve that much of reasonable bottom line growth.
Mr. Rao, take that point. So not pinpointing FY23 or 24, but over the next couple of years, can earnings grow a double digit, early double digits?
Yeah, definitely.
Okay. All right.
And what are the occupancies now? Just one last question. What are the occupancy levels now at your hospitals compared to what it was, say, 6 months ago?
It is around 65%, and then there is a lot of headroom to grow further.
Okay, there's headroom to grow further. We'll leave it at that. Thanks a lot for joining in.